is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. Trouble in iPhone City. Violent protests hit Apple's main plant in China as workers and security personnel clash over COVID restrictions and wages. The offshore yuan fell on the news. Wealth management troubles. Well, Credit Suisse sees a fourth quarter loss for the unit as shareholders vote on a capital increase at the embattled bank's EGM today. Shares slump. Plus, collateral crash. FTX founder Sam Bankman-Fried apologized to staff after financial buffers plummet by $51 billion. Sequoia says sorry to investors for backing FTX, but defends its vetting process. Now, first thing is first, so let's check in on the markets. Across the board, we did start a little bit higher on European stocks, and we had a bit of a lull, and now we're gaining about 0.1%. In terms of what's moving the most, the sectors, I'm looking at energy and some of the other ones. European stocks, of course, awaiting the release of policy minutes from the Federal Reserve's latest minutes. I know they will, of course, comb that through with a fine-tooth comb to understand exactly what they've been thinking. Attention is focused on that. It's from the November 1st and 2nd gathering. The U.S. 10-year yield ahead of that, 3.75. And then I'm looking at Bitcoin. We have some great, fantastic interviews actually coming up on crypto today and tomorrow, 16,520. If you look at the European map, it's also always interesting to see whether Germany's doing something different, for example, from France. Now, we had some PMI figures, both in Germany and France. Germany was interesting because they were both for services PMI, but also manufacturing PMI on the lower side, or certainly they were below 50, which indicates a contraction, but they were better than expected from economists. The CAC in France, actually a little bit different. PMI was a bit disappointing on the services side. Now, Euro area, November manufacturing PMI coming in overall for the Eurozone at 47.3. That overall is better than expected. Services PMI unchanged at 48.6. Not a huge move when it comes to euro-dollar 103.14. Now, FTX founder Sam Bankman-Fried has apologized to staff in a letter that outlined a crash in collateral from $60 billion down to $9 billion. In a court hearing, the lawyer from FTX said a substantial amount of the group's assets are missing or stolen. Well, Bloomberg's crypto reporter Subhashri Ghosh joins us now from Singapore. So, Subhashri, what do we know now? How bad does this look? Is this fraud? Like, what are we looking at?
Hi, yeah, it looks pretty bad. Firstly, that, SBF, Sam Bankman-Fried, he wrote a letter to FTX staff saying that, he was apologizing for the collapse of the crypto exchange. He mentioned, as you said, that the value of the collateral has crashed, and how they were left with $9 billion worth of collateral, and the liability was $2 billion. He even said, in the letter that Bloomberg has got, that I didn't mean for any of this to happen, and I would give anything to be able to go back and do things over again. That shows that the contagion is pretty much going ahead, and it's spilling over to other crypto exchanges, crypto companies, brokerages. And we have seen that happening across, in terms of, the markets are pretty much stable today, but it has come down from, it came down to November 2020 levels after this contagion spread.
Well, yeah, thank you so much for the update. Subhashri Ghosh there joining us, and we'll have plenty more, of course, also on Binance throughout the day. Now, we're joined by global market strategist at JP Morgan Asset Management. He's Mike Bell. Mike, good morning. I want to ask you about PMIs. I need to ask you about the Fed and, of course, inflation overall. But how do you read this fallout in crypto? Does it actually impact, I don't know if it's a liquidity, but market sentiment overall?
I don't think it's that relevant for broader publicly listed markets. It's obviously there's going to be some people who take some losses on it, but I don't think it's got a big read across for listed equities, for example.
And you don't have any exposure. Was there a call? Again, is there something that you're looking at to give us a sense of what happens next to crypto, or does it just shut it down?
I certainly don't have any exposure. I wouldn't go anywhere near it with a barge pole. Okay. I'll leave it at that, I think.
Mike, when you talk about the Fed and you look at what markets are pricing in, are they underestimating how aggressive the Fed still needs to be to get to around 2%?
I don't think so. I actually think if you look at where mortgages are in the US, you've got about 7% on a 30-year mortgage. To me, that seems like enough to slow the economy down. I think it's going to be enough to trigger a moderate recession in the US next year. And I don't really think they need to do any more than surprise. Obviously, that's a bit more than they've done so far. But I think getting to around 5% on Fed funds with mortgages at 7% on a 30-year, that's probably enough to slow the housing market and cause a moderate recession that brings wage growth down.
Are you expecting a correction in equities because we haven't even started seeing a real recession yet?
Yeah, I mean, that's interesting, isn't it? But I actually think that certainly if you look at where we were at the end of September when the S&P was down 25%, I think that the market had probably largely priced in the kind of moderate recession that I expect. Now we've come a little bit off those lows, but I'd be surprised if we go much lower than we were at the end of September. We may sort of bump around a bit over the next few months. Generally, markets don't bottom before unemployment starts rising, so it would be early if we have seen the bottom now. But that said, I do think this is, then there was a great chart I saw just yesterday showing professional forecasters' probability of a recession. And this is, if it happens, literally the most forecast recession in history.
True.
So there's a good chance that the market could have priced it in sooner than it normally does.
So you believe we can still avoid a recession?
No, I think we're going to get the recession.
Yep.
I just think the market priced it at the end of September. I mean, maybe not fully, but I think it went a long way to pricing the type of recession I expect.
So, Mike, I mean, is this a good time to get into the markets, or is still a little bit of a work through to go?
Yeah, it's very hard to say, but I think that by the end of next year, it's more likely than not that stocks are going to be higher than where they are now.
Okay.
So if you've got a sort of 12-month time horizon, then I think the markets did a fair amount of bad news pricing in this year.
Yeah.
And so next year is probably going to be a better year for stock markets. So broadly speaking, I think yes.
Okay, broadly speaking, but where? Which part of the market? You know, we're looking at liquidity concerns. We're also looking at leverage in certain parts of the markets. I mean, we had a guest earlier today talking about asset bubbles.
Yeah, I mean, so there's a couple of things that concern me. One is that parts of the market are still expensive.
Yep.
So I'd be more focused on the cheaper stuff. You look at the value stocks, the P's on that is pretty reasonable by historic standards, whereas the growth stocks came from very high valuations down to just high valuations. So I'd be more focused on the kind of value stocks, particularly in the US, where given that the majority of people are on these long-term fixed-rate mortgages, it's hard to see how it gets really bad. And then I also think China's very cheap. So I'd be tempted to be kind of moderately overweight US value stocks and overweight in China as well.
All right, Mike, thanks so much. Mike Bell, the global market strategist at JP Morgan Asset Management, stays with us. We'll talk a lot more about China. Coming up, the IMF First Deputy Managing Director, Gina Gopinath, speaks to Bloomberg about the slowdown in China and the challenges facing the global economy. That exclusive interview is coming up next. Also, Manchester United shares rising 11% as the Glazers are weighing the potential sale of the club. This is Bloomberg.
China is a large economy, which means that its growth has very direct implications for demand for certain kinds of commodities. For example, metal prices. We've seen that metal prices are highly sensitive to what's happening in China in terms of growth and activity, in terms of construction. So that's one direct channel through commodity prices, especially metal prices, that we see that happening. For the region, China is very connected with Southeast Asia, with trade with East Asian countries, Japan, and again, any slowing of demand in China, but also any kind of supply chain disruptions has effects for the rest of the world. So I think these are some of the important channels through which it has spillovers to other countries. In terms of what's happening now for China, obviously the drivers are very different. It's the COVID pandemic that continues to lead to shutdowns and lockdowns in China because of the policies that the government has adopted. The zero COVID policy worked very well at the beginning of the pandemic, but now we have a different strain of the virus, which they still need to adapt to. And then the second is the property sector, which has to be, corrections have to happen, but the idea is to get it done in an orderly manner.
Well, that was the IMF First Deputy Managing Director, Geeka Gopinath, speaking exclusively to Bloomberg's Haslinda Amin. Now, violent protests have erupted at Apple's main iPhone-making plant in China. That's after hundreds of workers clashed with security personnel following almost a month of living under tough COVID restrictions. Well, joining us now is Bloomberg's Betty Hu. Betty, what can you tell us about what exactly happened on the ground?
Right, so Wednesday, very early morning Asia time, at Apple's major supplier Foxconn site in Zhengzhou, which is called the iPhone City, hundreds of workers streamed out of their dormitories and then clashed with the guards. Based on our reporting, that was due to a lot of resentment due to unpaid wages and also fears of further spread of the virus.
Betty, thank you so much. We'll continue, of course, following this very closely with our Betty Hu in Taipei. Now, we're back with Mike Bell, Global Market Strategist at JP Morgan Asset Management. Mike, I know you were saying that actually you can see also opportunities in China right now. And then we're trying to find out more, of course, on the ground. We have the reporters that are going to have a look. But how do you mix and match the two? Could we see, does it mean that there are going to be less regulatory or are going to support the economy more and rise wages, or how do you see the mismatch?
I guess the way I think about it is almost every client I speak to is so bearish on China, and you can see that in market action, right? The price is still down, even after quite a strong rally in November. It's still down about 55% from its peak. So there's a lot of pessimism baked into Chinese stocks, and I think ultimately the catalyst that's required is them moving past zero COVID, and it's not obvious how or when that happens. But it also is, I think, quite obvious they can't stick with zero COVID forever. And so when they do eventually move past zero COVID, I think there's substantial upside in China. So that's really why I think there's an argument in favor of having a small overweight there.
Mike, when China reopens, how inflationary will that be for the rest of the world?
Well, I mean, I think, interesting, part of what you're seeing at the moment is some of the supply chain disruptions are easing. So, for example, the cost of shipping from China to the West is coming down quite materially. So that's actually going to have a bit of a disinflationary impact. On the other hand, the demand coming for things like perhaps metals, particularly if they then, once they reopen, do some more fiscal stimulus, that could put some upward pressure on things like metal prices.
Overall, how do you play commodities, if you play them?
Yeah, I'd be inclined to not take big bets on commodities at the moment, just be sort of broadly neutral. Obviously, there's supply constraints in the commodity markets, which is why we've seen such high commodity prices. On the other hand, if we're right that we go into a recession in the major developed market economies next year, then historically that hits commodity demand. It's very hard to say, given you've got potential China reopening affecting metal prices and then the West going into a recession at the same time. So I don't have high conviction on it.
Mike, I know we talked a little bit before about equities and the fact that actually you think that broadly over the next 12 months we'll be in a better shape in terms of equity prices than we are now. What will happen in between, though? How volatile are the next 12 months going to be?
Yeah, it's fascinating because you could easily, if you look at the kind of last 3 bear market playbook, then it's too early, right? Yeah. You'd be saying the market shouldn't be bottoming at this point because unemployment hasn't even started rising, the Fed aren't cutting rates, and historically those two things happen before the market bottoms. So you'd think it's too early. On the other hand, the market doesn't normally go down 25% before anyone's even lost their jobs yet on a net basis. So you look at 08 or you look at the 2000 recessions, the market basically only started to go down as jobless claims rose. And of course, this time around, it went down 25% before jobless claims even started picking up meaningfully. So I think the market has moved in advance, which means that it may be that the traditional playbook applies and we have a bumpy period for the next few months. Perhaps we could retest the lows we saw in September. I'd be surprised if we go much lower. Or it may just be that the market priced it in earlier and we've already seen the low.
But Mike, is this on the assumption that, first of all, we've hit peak inflation, for the moment, which doesn't mean that it falls off a cliff, but certainly it doesn't go higher than this? And is it also on the assumption that dollar doesn't go higher?
So I don't think the dollar is key to the call, but I do think the inflation picture is important. I actually think what's fascinating is that it could end up looking a lot like it did in the late 60s, early 70s, where stocks and bonds sold off together as inflation picked up and the Fed slammed on the brakes. But then once you saw the peak pricing in 10-year Treasury yields and the peak in inflation, both bond yields peaked and stocks bottomed at the same time. And everyone remembers those 70s as a period where you had that positive stock-bond correlation as a bad thing. But they didn't just go down together, they went up together as well. No. And I can see how that could happen again this time. You could see bond yields coming down and equities going up together.
Mike, thank you so much. Mike Bell, the global market strategist at JP Morgan Asset Management. Coming up, Credit Suisse falls after it warns it's expecting a net loss in the fourth quarter, citing more outflows and poor market conditions. We'll have plenty more on that next. And this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Hi, Francine. The EU has watered down its latest plans for a price cap on Russian oil exports by delaying its full implementation and softening key shipping provisions. According to a document seen by Bloomberg, the bloc proposed adding a 45-day transition to the introduction of the cap. The European Commission also proposed an emergency brake on natural gas prices of €275 per megawatt hour, well above current price levels. The Kiwi dollar jumped as New Zealand's central bank raised rates by a record 75 basis points and signalled further tightening ahead. The Monetary Policy Committee lifted the cash rate to 4.25%. On the property market, the RBNZ central projection now includes a 20% fall in house prices from their peak a year ago. The leader of Malaysia's former ruling bloc has told a news website that the country's king has decreed his coalition must join a so-called unity government. The king is to consult fellow royals as he continues to deliberate over the appointment of the new prime minister after last weekend's inconclusive election. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg, Francine.
Laura, thanks so much. Now, Credit Suisse shares have fallen after it warned it will book a loss of up to 1.6 billion Swiss francs for the fourth quarter. Now, it comes as the embattled Swiss lender undergoes another sweeping overhaul. Now, for more on all of this, let's bring Bloomberg's Charlie Wells. So, Charlie, good morning. You're keeping us smarter on what's happening at Credit Suisse. I mean, asset outflows were huge, and it feels like every week there's a problem at Credit Suisse. Like, how do they get out of the spiral?
Yeah, so, Francine, this was supposed to be a day of turnaround for Credit Suisse, but it's instead, in just a few hours, turned into a day of turmoil. So shareholders are voting in Zurich today on a plan to raise $4 billion in capital. This is a part of that turnaround plan. But of course, what we are seeing in this announcement from Credit Suisse is bad news, not just for its investment banking unit, which we sort of predicted, well, we've known about for a long time, but also loss projections and outflows from wealth and asset management in the end of the third quarter, totaling to about $90 billion, which analysts from JP Morgan have just said is concerning.
So what does that mean for how shareholders will vote at the extraordinary general meeting today?
This is tricky. So proxy advisors have been telling shareholders that they should vote in favor of this change, of this capital raise of $4 billion. That involves issuing new shares to the likes of Saudi National Bank, which would take a 10% stake with those new shares, but also giving a rights offering to existing shareholders. The issue, of course, is dilution. So those shareholders who are unhappy today because of the dramatic decline in the price of that share also would see their shares diluted because of these new issuances.
But they probably don't have a choice because we're talking, I mean, otherwise, if they don't have that capital, what do they do? Can they even survive?
That is so on point. They are stuck between what I would say is a boulder and a hard place because, they would have a dilution of potentially 34% on earnings per share. But if they do not approve this measure, that dilution would be about 40%. So they really have few options here.
I mean, what happens to Credit Suisse going forward? I know that there was, a lot of concerns about solvency, which the chief executive really pushed back against.
Right.
But where do you see this bank being in the next 12 months?
Well, look, the plan was to really focus on private banking, to focus on wealth. But when you see that $90 billion approximate outflow at the end of the third quarter, you just think this is a real challenge of trust. And banking at the end of the day is about trusting someone to be a custodian of your money. And what we're seeing from these client outflows is that trust is in short supply at Credit Suisse right now.
Charlie, do we know where these outflows are going? Is there another bank that's benefiting?
I think that will come to light in the days ahead. Of course, there are other banks in Switzerland. This is just Switzerland's second largest lender. We know that, Credit Suisse had kind of set itself apart by being the bank that did not need to take a government bailout during the financial crisis. Other banks in that country did, but that may have created an atmosphere inside the bank of risk-taking, of failure to check on compliance in the way that other banks that did struggle perhaps more in the financial crisis did not.
Charlie, thank you so much. Charlie Wells there, of course, bringing us the very latest on Credit Suisse. Coming up, the European Bank for Reconstruction and Development urges policymakers to remain focused on greener energy and free trade. We have more on the bank's global economy report. That's coming up next, and this is Bloomberg. Trouble in iPhone City. Violent protests hit Apple's main plant in China as workers and security personnel clash over COVID restrictions and wages. The offshore yuan fell on the news. Wealth management troubles. Credit Suisse sees a fourth quarter loss for the unit as shareholders vote on a capital increase at the embattled bank's EGM today. Shares slump. Plus, collateral crash. FTX founder Sam Bankman-Fried apologizes to staff after financial buffers plummet by $51 billion. Sequoia says sorry to investors for backing FTX, but defends its vetting process. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the European Bank for Reconstruction and Development says policymakers should not lose focus on the long-term goals of greener energy and free trade. In the bank's latest transition report entitled Business Unusual, it argues that these will continue to be the main drivers of future growth as the global economy seeks to recover from the pandemic and Russia's ongoing war in Ukraine. Well, we're delighted today to be joined by the chief economist at the European Bank for Reconstruction and Development, Beata Jafkovic. Beata, thank you for joining us. Do you worry that because of all the concerns of a recession ongoing, we're taking a back step to the progress that we had made towards cleaner energy?
Indeed, I worry very much about the fact that governments, which are focused on immediate needs, on fighting fires daily, weekly, monthly, are losing sight of long-term goals. By dealing with problems they are facing today, by trying to remedy the problems, they are pushing the burden of debt, they are pushing problems into the future. So think about protecting firms from creditors, a measure that's quite popular in emerging Europe. By protecting firms, banks are creating costs for the banking sector in the future, and they risk creating zombies. Many firms borrowed a lot of money when interest rates were low. Now interest rates are high. There is a downturn, and many firms will have a hard time coping with this new situation. So they will be pushing governments to extend these emergency measures, protecting them from creditors. But that's only going to lead to zombification.
I know, but Beata, I mean, this is very difficult. And actually, over the last 4 to 5 years on this program, we talked a lot about zombification, which was one of the main concerns of the G30, of the group of thinkers. Like, are we too late to this? Because actually, inflation is so aggressive that interest rates have to rise quite quickly. And so the leverage will create zombification of certain companies for sure.
Well, we are not too late. We just should be careful about not prolonging the problem. We document in our report that emerging Europe is particularly vulnerable because of high presence of state-owned banks. State-owned banks are much more enthusiastic when it comes to lending to zombies, either because they are instructed by governments to do so, or because they know that if they get into trouble, the state will bail them out. So, we need to prevent state-owned banks from becoming super spreaders of zombification.
So, Beata, is there a part of the corporate world, an industry that you worry about the most, where beatification could actually have longer-term consequences?
Well, this problem of zombification is connected to the green transition. If we keep capital and labor trapped in firms that are not productive, in firms that are kept artificially alive by subsidized credit, we are not allowing capital and labor to move to new activities. And we need big structural changes in our economies in order to adjust to the greener future, in order to go through green transition.
So again, who's listening at the moment, Beata? What is the window to make sure that we don't get down that road and create something even uglier than what we've had in the last 10 years? Is it something that we need to be acutely aware in the next 6 months, or will it take much longer?
Well, we need to be acutely aware now, because many of the measures governments are taking are actually counterproductive when it comes to green transition. So think about zero VAT on energy. This is not helping just vulnerable households. It's actually helping everybody, and it's lowering incentives to save energy, incentives among households that can afford high energy prices. And we really need these higher energy prices in order to change the way we consume things.
Beata, are you seeing peak inflation, or do you think it'll get much worse around the world? And again, what's the second round effect of that in 12 and then 24 months?
So we think that in emerging Europe, inflation has not peaked yet because high energy prices have not been passed on to the households yet, simply because of the way contracts on supplying households have been structured. And forecasts say that we are going to have high energy prices in Europe well into 2024. Then we also see that producer prices increased much more than consumer prices. So producers have not passed on the higher costs onto the households yet. And in emerging markets, we have the additional issue of inflationary expectations rising faster, simply because many people have lived through hyperinflation in their lifetime. They remember it, and therefore they tend to expect high inflation much faster than people in advanced economies who have not experienced hyperinflation firsthand.
Beata, how are you expecting, I mean, it's very difficult to know, of course, how the war in Ukraine will end, but how are you expecting the war changing the long-term economic prospects of Europe?
Well, I think what we need to think about now is reconstruction. Now, the whole discussion about reconstructing Ukraine focuses on physical capital, but human capital will be equally, if not important, when it comes to the reconstruction phase. And the best way of ensuring that Ukraine has the human capital when it comes to reconstruction is to prevent another massive wave of refugees. And that means supporting Ukrainian government now and supporting firms, state-owned firms that provide basic services to people so that Ukrainian population can make it through the winter. And I'm happy to say that the EBRD is contributing a lot. We have extended loans to help Naftogaz make gas purchases for winter. We are supporting firms producing and distributing electricity so that life in Ukraine will be easier and that people there can make it through the winter.
All right, thank you so much, Beata Javkovic, there, the chief economist of the European Bank for Reconstruction and Development, on that very important also paper that they put out. So we'll have plenty more, of course, on the markets and plenty more on inflation. We also have some breaking news out of China. Beijing is asking residents not to leave the city unless necessary. This goes back to our main story about COVID restrictions and the fact that just 2 weeks ago, we thought that it could be a loosening, certainly, of the COVID zero policy, and actually there has been a reversal because of deaths due to COVID in China. Coming up, Manchester United's owners say they're considering selling the club. We'll discuss what that means for one of the world's biggest football teams. That's coming up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, shares in Manchester United are higher in U.S. pre-market trade one day after the club's American owners said they're considering putting the iconic Premier League side up for sale. Now, the Glazer family is working with financial advisors on the process, which could lead to a partial sale of the club or investments, including stadium and infrastructure redevelopment. Now, to unpack this, I couldn't be more excited. Simon Chadwick, professor of sport and geopolitical economy at Skema Business School, and Bloomberg's Joe Easton. So thank you both for joining us. Joe, even I'm excited, and I'm not a huge football fan, but it feels like UK clubs are up for sale.
Yeah,
period.
I think that's definitely the case, and I think it's quite a unique opportunity, really, for football club valuations, and I think that's probably what the Glazers have seen here. If you look at where, for example, my beloved Chelsea priced when they sold, $3.1 billion, which is about $1 billion more than where Man United was trading before this news broke. So clearly there's some value to unlock.
But you're a Chelsea fan? This is
I am,
big breaking
and
news.
I've just admitted it on live TV.
I am too. Simon, are you a Chelsea fan? What would you buy right now? How do you unlock value in Man
I'd buy
United?
Middlesbrough, which is a far superior club to Chelsea.
Of course.
I mean, these are really interesting times because I think in current operating conditions, it is almost as though we're at peak value, because in your previous package, I was listening to the commentator speak about harsh economic conditions, and clearly football clubs are not immune from those harsh economic conditions. So it may well be that the Glazers want to cash out now before any problems hit. But I think also there are future opportunities, for example, particularly around the metaverse, around digital and different broadcasting platforms. And so it could well be as well that what they're doing is they're on a fishing trip to see what additional investment they can draw in to help them with those digital investments.
But I always heard, Joe, certainly from investors that maybe wanted to take something in Man United, saying, look, the Glazers just wanted too much. We're talking, potentially $7-8 billion. I mean, that's crazy money.
Yeah, and I think that they're probably getting a little bit worried now. I mean, it ties in with what Simon was saying about peak valuations. And I think they're probably a little bit worried about the Middle Eastern money that's in the game now with Man City, obviously Newcastle, who haven't really dipped into their deep pockets yet, and they're still flying up the league. So I think the peak valuation story might be coming true now, I think.
Simon, is the Super League going to be back? If you have Americans buying in, and I know last time was an absolute disaster for all those involved, but if you're going to make this a viable option, and if this gets sold to Americans, I mean, we have no idea who could bid for it, Simon, but do you think that will be back on the table?
The first time the Super League conversation first emerged was 2008. So the 2021 conversation was actually a revisiting of a much older conversation. So, a simple answer to your question is the Super League discussion will never go away, certainly under current conditions, because inevitably those bigger clubs, the likes of United, Real Madrid, Bayern Munich and others, although Bayern Munich is possibly an exception, they believe that the revenues that are coming into the game are really driven by them. They're not driven by clubs from, for example, Estonia or Hungary or even other clubs in the likes of the Premier League and La Liga. They are the value drivers of the industry, and so they want a bigger share of the cake.
Who's likely to buy Man United, Joe?
I think most likely private equity, and I think you obviously saw that with Chelsea. And I think that there is a lot of value to be made, particularly in Asia. Man United, they claim to have around 1 billion fans in Asia. Whether that number's quite true, not really sure, but they definitely have a big Asian exposure that private equity will be looking to get into, I think.
I mean, we know that, Mr. Ratcliffe was looking at Chelsea. Do you go, Joe, to the list of people that wanted Chelsea and say, actually, they'd be interested in this club? Or is it just a different ball game because the money's different, the money involved?
I think you could see someone coming in and buying it as a trophy club, with the individuals that we spoke about with Chelsea. I think that could be an option, but again, I think that it'll most likely be a consortium. Maybe a consortium of private equity seems to be most likely. But I think there will be a bidding process. I don't think it'll be one bidder comes in, deal is done. I think this could be back and forth. I think it could be, potentially several bidders coming in, and then it could be a drawn-out process.
Simon, who do you think will buy it?
I think I agree with Joe. I mean, if we look to the Gulf region, it's very hard to see who right now would be inclined to buy United. There's a lot of talk about Dubai. I think if there is any money coming out of the Gulf region, it's more likely to come out of Dubai than anywhere else. The other region of the world, though, that I would alert people to is kind of South Asia, Southeast Asia. There was what appears to be an untrue rumor about the Ambani family buying Liverpool. I think India potentially is a very interesting possibility, but Southeast Asia, Indonesia, Malaysia, Thailand, we already have owners in the Premier League from this region. But otherwise, I think I agree with Joe. It'll be a consortium of private equity buyers.
Joe, a reminder, a curiosity, but also a reminder to all the big football stars watching this program. I know that if you were to give an explosive interview to one Piers Morgan, you can also come on Leaders with Lacqua and give me an explosive interview. I mean, what happened? Were the two linked? I mean, yesterday there was so much news for Man United because suddenly Ronaldo leaves, but then they're also looking at selling the club. Completely unrelated, or is there a web of ideas there?
I think that and this is just my guess, but I do think that maybe the news was leaked in order to bury the Ronaldo story and take that out of the headlines. But, that's speculation. But I think it was too close timing. I mean, the Ronaldo story broke, and then within 30 minutes, the Man United sales story breaks. The timing seems like somebody might have wanted to do a bit of PR work there, I would have thought.
Simon, who do you think, or what club do you think has the most potential in the UK overall?
In terms of investment from
business,
private equity?
Yeah.
I mean, the one club that I think has kind of stuck in my mind for quite some time now is West Ham. And there were stories going back 4, 5, 6 years ago about the Qataris being interested in acquiring West Ham. And keep in mind that a large part of the Olympic Park, where the West Ham Stadium is based, is owned by the Qatari government. And if you think about it, West Ham in many ways it's in an ideal location, very close to the centre of London, modern stadium, great infrastructure, great access. Some history there. Obviously West Ham have performed well in Europe back in the kind of 70s and 80s. Big fan base. So West Ham is a really interesting one, but obviously United, for lots of reasons, is still a showcase asset. I mean, it's really interesting because, again, your breaking news about China. Manchester United has got plans to open 3 experience centres in China. In fact, the first one is open in Beijing. And I think in some of those overseas markets, the club is still very, very popular in spite of its recent problems on the field and off the field. And so, if not West Ham, then certainly United. Obviously, there are other clubs too. I know Leeds United, for example. There are stories about Leeds United being up for sale. But the reality is the Premier League still is the world's biggest sports league. Certainly rivaling the NBA in commercial terms. And so I think many of those
so much
clubs
potential.
They've always got lots of potential.
But also, you need deep pockets. Simon, thank you so much. Simon Chadwick there, Professor of Sport and Geopolitical Economy at Skema Business School, and of course our very own Joe Easton, looking at what the Glazers will do. Join us tomorrow for much more on the Glazers' potential sale of Manchester United. I'll be hosting an in-depth discussion of Britain in the balance, and we speak to the guy that loves Man United maybe more than anyone else, Jim O'Neill. He'll be joining us at 9:30 a.m. London time on Thursday. Coming up, the UK Supreme Court is set to deliver a crucial ruling as the fight for a second Scottish independence referendum heats up. These are live pictures. We'll have the latest next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. Sam Bankman-Fried, founder of the collapsed crypto exchange FTX, has apologized in a letter to staff saying, "I didn't mean any of this to happen." The memo seen by Bloomberg outlines a crash in collateral from $60 billion to $9 billion. Meanwhile, a lawyer for FTX Group says a substantial amount of the crypto firm's assets are either stolen or missing. A hearing on the issue is set for mid-December. Hundreds of workers at Apple's main iPhone factory in China have clashed with security personnel as tensions boiled over after almost a month of tough COVID restrictions. Mobile phone footage shows staff at the Foxconn plant streaming out of dormitories in the early hours of the morning, jostling and pushing past guards who they vastly outnumbered. Anti-riot police were reported to have later restored order. The EU has watered down its latest plans for a price cap on Russian oil exports by delaying its full implementation and softening key shipping provisions. According to a document seen by Bloomberg, the bloc proposed adding a 45-day transition to the introduction of the cap. The European Commission also proposed an emergency brake on natural gas prices of €275 per megawatt hour, well above current price levels. That's the Bloomberg Business Flash. Francine.
Laura, now the UK Supreme Court said to rule on whether Scotland's Parliament can legislate for a second independence referendum without Westminster approval. Now, the Scottish First Minister, Nicola Sturgeon, wants a new vote in October next year. That's despite opposition from the UK government in Westminster. So we are expecting, of course, that judgment to be passed on very, very shortly. It should have happened about 6-7 minutes ago. It could have a major implication, of course, for the future of the UK, and whatever the decision is, it is likely to trigger a massive political battle. Now, for more, let's talk to Bloomberg's managing editor for European economy and government. He is Ben Sills. Ben, there's a lot at stake. How do you see this, happening in the next 12 months?
Well, the consensus seems to be from the people we've spoken to that people are expecting the court to block this vote, which is going to be a big sigh of relief for the government, for both Rishi Sunak and Keir Starmer, the opposition leader, who is hoping to take over in a couple of years' time. Neither of them really want to open up this whole kind of worms over Scottish independence again.
So, Ben, how does it fit into the broader political challenges facing Rishi Sunak?
Well, so Scotland is a bit of a kind of outlier in the British political scene. It's dominated by the Scottish nationalists who are pushing for this referendum. But traditionally, it was a big source of votes for the Labour Party. So Sunak, one of Sunak's main tactics, main messages in his attacks on Starmer has been that Starmer's weak on Scotland. He's going to do a deal with the Scottish nationalists. So if the vote is approved, Starmer's going to be weak, exposed to those sorts of attacks. But Sunak, he's a prime minister who's going to potentially see the UK split.
All right, Ben, thank you so much. Ben Sills there, of course, our managing editor for European economy and government. We're looking at live pictures of the Supreme Court with Lord Reid. He's the president of the Supreme Court, saying just minutes ago that they had decided that it does have the power to decide the question. It has been asked. We're just now waiting for the verdict. This is Bloomberg.
Given the high level of inflation, restoring price stability remains the #1 focus of the FOMC.
This inflation is having a tremendous impact on people's incomes. Right now, our central scenario is not a recession. Sluggish growth, but not a recession.
The main question for us is how deep the recession is going to be and how long.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. The disgraced founder of FTX speaks out. Sam Bankman-Fried apologizes to staff and says that collateral collapsed by $51 billion as the crypto exchange crumbled. A warning from Credit Suisse. The bank says its fourth quarter loss may hit $1.6 billion due to massive outflows of wealth management funds. And violent protests erupt at the Chinese factory that is the biggest maker of iPhones. Workers battle security personnel over tough COVID restrictions. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. And big news here in London just in the last few minutes then, Kailey, is that the Supreme Court has thrown out the Scottish Government's attempt to hold another independence referendum next year. So stand down on Indy Ref 2. The pound moves a little bit higher on that. The broader market action, though, following the ebb and flow of the Fed in a week that is holiday shortened by Thanksgiving.
Yeah, I know I speak for Matt and myself where this is our last day of work this week, so we certainly are excited. And when you look at the markets, they seem like they're pretty excited this morning as well, in that things generally are moving in a positive direction. That was certainly the case in Asia overnight. The MSCI Asia Pacific Index as a whole only up about 0.3%, but part of what was helping that was a small rebound in the Chinese technology sector. The Hang Seng Tech Index up a little more than 1%. A large part of that having to do with the fact that Chinese regulators have fined Ant Group, which of course is controlled by Jack Ma, a little more than $1 billion. But that is seen as a sign that it perhaps ends the regulatory reformation of that company and perhaps the regulatory crackdown on Chinese tech overall. So that's giving a little bit of a lift to sentiment. The other big story in the Asia Pacific overnight is from New Zealand. The central bank hiking rate 75 basis points and also saying that the peak rate is going to be even higher than expected. So overall, a very hawkish decision from the RBNZ. And as a result, the two-year yield in New Zealand up 19 basis points on the day to just shy of the 458 level. And the New Zealand dollar, the Kiwi dollar, the strongest in G10 this morning, Matt, strengthening against the U.S. dollar by about 0.4%.
All right, very interesting stuff. The U.S. dollar really bouncing back and forth between gains and losses, not doing a whole lot today. We do have futures higher after the gains that we saw in the cash trade yesterday. The S&P closed up over 4,000 for the first time since the beginning of September. So we're at relatively high levels right now. The U.S. 10-year yield is coming down, but just by a bit to 374.83. If it continues to decrease, that could be a tailwind for risk assets. NYMEX crude rising about 0.2% right now, $81.49 a barrel for West Texas Intermediate, and we see Brent getting closer to $90 as well. And then Bitcoin right now up 2.5%, but really still holding at the same levels that we've been seeing since the FTX collapse, about $16,500. So it doesn't look like the underlying asset is moving, even as we get more news out of the business or the failed business. Anna, what do you see in terms of the European markets?
Yeah, European equity markets then, Matt, getting a bit of a boost if you have a weighting towards energy stocks and mining stocks. So London doing pretty well in that context, up by around 0.6%. The German market and the French market a little flatter this morning. Glencore is one of the businesses that has been doing well. I mentioned energy and mining. Well, mining includes Glencore, and Glencore is one of the stocks that's moving a little higher. The business talking about copper, analysts in the sector, though, talking about what's been going on with their thermal coal business. You can see the stock is up by just over 4%. It's the biggest it has been for much of the morning, the biggest gainer on the stock 600. This is also an energy story. Natural gas prices. This is the European benchmark. This is the benchmark that the European Union attached a cap to yesterday. Is it a cap with any teeth, though? This is where we trade right now, 130 euros a megawatt hour. The cap has come in at 275 euros a megawatt hour. Not a region that prices have been above for very long, and therefore how meaningful will that cap be? You can see that the actual price of gas jumping 9% in this morning's session. That has to do with expectations around cold weather in December, though. The pound is at 119.16, a bit of a bump up in the pound just in the last half hour or so, as we heard from the Supreme Court here in London, throwing out the Scottish Government's push for another independence referendum. The government here in London has always said this was supposed to be decided once in a generation in 2014. The SNP has a long-standing position, wants to push for independence, and they have said that the Brexit vote changed that calculation. Credit Suisse is down by 4.5%, and we are, of course, focused on the EGM and all that is going on at Credit Suisse. We've had new forecasts out of the business. We've had some of our reporting talking about pullbacks in terms of staffing levels over in China. So there's a lot to digest when it comes to Credit Suisse. For more on this story, let's bring in Bloomberg's Charlie Wells, who has details for us. Charlie, how damaging is this update for the bank? Because they're talking about a big loss, and this is to do with outflows.
Anna, this is very not good for the bank. Today was supposed to be a day of turnarounds for Credit Suisse, but instead we are seeing turmoil in that share price hitting record lows, but also projected $1.6 billion losses for the fourth quarter and also massive outflows. Those are actually the words of strategists. Massive outflows of nearly $90 billion. Now, JP Morgan analysts have said that that is concerning, and that is concerning in particular because the whole turnaround plan for this lender was to focus more on private banking, was to focus more on wealth management. But if we're seeing clients take funds out of the bank, that is very bad for this turnaround plan.
How bad is it? I mean, are there any questions about the possibility that Credit Suisse doesn't survive?
Matt, I mean, that really is the existential question that we need to think about here, right? This is Switzerland's second largest lender. A failure would be incredibly damaging. But let's just remember that we are in a very different position than we were, say, during that Lehman era. Executives have been very keen to note that capital ratio is strong at this bank. And let's think about the history of Credit Suisse. It goes back 160 years. They were actually able to weather that financial crisis without taking a government bailout. But that does not underestimate the challenges that they face, especially getting these data points like we're getting today.
All right, Bloomberg's Charlie Wells, thank you so much. Let's turn from turmoil at Credit Suisse to turmoil in crypto. FTX founder Sam Bankman-Fried is apologizing again. In a note to staff, he claimed the firm's collateral had crashed to $9 billion from $60 billion. He also claims that funding interest came in 8 minutes after he signed bankruptcy papers. Joining us now is Bloomberg crypto reporter Emily Nicole. So, Emily, we continually get updates, but I think the question on everyone's mind, especially as the bankruptcy hearings began yesterday, is who's going to get their money back and how much?
Well, it was definitely a bit more of an unclear sentiment than we were hoping for from the bankruptcy hearing yesterday. We were told that we're unlikely to know which creditors are owed how much as this process goes on. Maybe the judge may revise that later. But as we heard from Sam Bankman-Fried in his letter as well, it doesn't sound like there is much assets left for creditors to get hold of.
In terms of other fallout or other reaction, Cathie Wood says Grayscale is now the crown jewel of Barry Silbert's digital currency group conglomerate. She spoke with Bloomberg yesterday. Take a listen.
We know that the Grayscale investment trusts are the most valuable part of that company right now. They're cash cows. They're revenue generating. We think they're going to try and hold on to that, if nothing else. We're looking at a 41% discount of this trust relative to Bitcoin today. And so we actually think there's a lot of upside.
Yeah, Grayscale is trading at a massive discount. The other, I guess, jewels, if you will, in Barry Silbert's crown include Genesis. Is this business going to make it?
If you think of our reporting earlier this week that said that they were still out for a $1 billion loan, but, bankruptcy is right around the corner, then who knows whether Genesis will make it. I mean, it's still very much up in the air as to whether or not we're going to see anything progressing from Genesis on that front. But the spokespeople for the company at least are telling us that it's still definitely on the table that fundraising could happen and bankruptcy is not a given.
All right, Bloomberg's Emily Nicole keeping us up to date with every twist and turn in this saga. Thank you so much. And in related crypto news, New York Governor Kathy Hochul signed one of the most restrictive laws in the U.S. on regulating crypto mining, citing environmental concerns. The bill triggers a 2-year moratorium on new permits for crypto mining companies. And of course, Anna, the environmental concern, something that is continually raised by regulators and lawmakers, but they've been given a lot more to think about when it comes to this industry over the course of the last several weeks.
Yeah, absolutely. There's certainly another strand of the crypto story that just keeps on giving. Let's turn to a different story that's been making some market movements, actually, having a market-moving impact overnight. Violent protests at Apple's main iPhone making plant in China. That's after hundreds of workers clashed with security personnel following almost a month of living under tough COVID restrictions. Joining us now is Bloomberg's Betty Hu, who can tell us a little bit more about this. We saw this weighing on the Chinese currency, actually, Betty, as these reports came in, and the video that we've shown and will show that was going around on social media. What more can you tell us about what happened here?
Right. So in early Asia morning Wednesday, hundreds of workers at the world's biggest iPhone plant rushed out of their dormitories, and then they were involved in violent clashes with the guards on the site. Our witness at the site told us that this was mainly because some workers were upset about not getting the wages and the subsidies that the company promised them to get. And then we had just received an official statement from the company which confirms that the violent occasions were true and that they are working very hard to communicate with the workers to prevent this from happening again.
How have the markets been reacting?
Right, so the offshore one, it slipped after Bloomberg reported on the news, making it the worst performing Asian currencies as of Wednesday. And I think what's also worth watching is how Apple's shares and also other Asian technology shares do in the following day, because this news obviously signals the market that, you know, there is still a lot of uncertainties regarding China's full reopening, and this is something that we definitely, in the market, everybody definitely needs to watch.
All right, Apple shares little changed in pre-market trading at the moment, but as you say, Betty, we'll continue to keep an eye. Thank you so much to Bloomberg's Betty Ho in Taipei. Now to another story that caught our eye this morning. Football club Manchester United might be up for sale. The owners, the Glazer family, are exploring strategic options and working with financial advisors on a partial sale of the club or investments including stadium and infrastructure redevelopment. That follows news yesterday that soccer star Cristiano Ronaldo is leaving the team with immediate effect. But investors seem to be much more focused on the sales news this morning, because in pre-market trading, those Manchester United shares are surging by about 10%. Another stock that is gaining in pre-market this morning is Coinbase. This actually extending the gains we saw yesterday when the stock rose about 5%. Just more positivity, it seems, coming into the crypto space as we've seen a stabilization in coin price. Coinbase is up about 3% before the bell. One stock sinking, though, in early hours is Nordstrom. It reported earnings yesterday. Its margins missed expectations, profitability taking a hit by the fact that the company is having to do more markdowns. This is something we have heard from a number of retailers over the course of this earnings season. That stock is down 9%. And of course, we're going to talk more about retail and the unofficial beginning of the holiday shopping season later on today, Anna.
Yeah, absolutely. In fact, coming up shortly, we will dig into the health of the consumer with holiday season almost upon us. Stacey Widlitz joins us, president of SW Retail Advisors. Is it going to be all about that inventory? Plus, Ethos Foundation CEO and Credit Suisse shareholder, crucially, Vincent Kaufmann joins us. His thoughts on Credit Suisse's restructuring efforts. Which of the changes at the business proposed at the EGM will Ethos be supporting? This is Bloomberg.
Welcome back to Bloomberg Surveillance. This is the early edition. I'm Matt Miller here in New York with Kailey Leinz, Anna Edwards with us out of London. Now, we are looking at 1 month of real inflows into JNK and HYG. These are two high-yield ETFs, and it looks like investors are willing to take that risk that they haven't previously been. Joining us now is Denitsa Tikova, Bloomberg cross-asset reporter, to tell us why. Denitsa, what's going on here?
Yeah, well, overall, we're not seeing a strong risk-on sentiment case. We know equity exposure is still quite low. If we look at the ETF markets, there are actually some signs that investors may be willing to take some risks. As you said, junk bond ETFs, for example, the HYG is having its second best month on record. This is $4 billion flowing in so far this month. If we just look, for example, the QQQ, which is tracking the NASDAQ 100 and tech stocks, which this year hasn't been getting big inflows, we're seeing very strong inflow this month. We're seeing close to $7 billion and the second best month this year. So at different corners of the ETF markets, there are some risk-on cases that may be building.
Okay.
Yeah,
sorry, Denitsa, I was just going to move us on to another asset because we've just had some breaking news around it. It'd be great to get your perspective. So the European Union, in coordination with G7 nations, is discussing capping the price of Russian crude oil at between $65 and $70 a barrel. This is according to people familiar. Talking to our colleagues here at Bloomberg News, this needs approval of EU ambassadors. Then it could lead to an announcement later today from the G7. This has been something that oil markets have been watching for. I can't see a great deal of impact on the oil price right now. We're still up around 0.5% on Brent. What are your thoughts?
No, for sure. I think it's too early to kind of weigh and see what the effects will be in terms of oil prices. What we've seen lately is a little bit of a slowdown, but so far it feels that we kind of
because the aim of this package is to keep, Kailey, the oil flowing from Russia, but at a lower level, so that of course the Putin regime does not get quite so many petrodollars. That's the aim of it, but there's a lot of detail behind that, though, Kailey.
Right, wanting to inflict some punishment on the Kremlin, but also not punish the economies that are dependent on that energy. energy. And of course, all of this feeds back into the inflation conversation, Denise said. We'll get some more clarity perhaps about the Fed's thinking around that and what it needs to do to get inflation down when we get the minutes at 2 p.m. Eastern time this afternoon. What is the potential biggest catalyst from those minutes?
Yeah, obviously everyone is so focused on those minutes. We've seen that there has been some crumbling of that big inflation trade. That was obviously short bonds, short stocks. One of the big beneficiaries were CTAs that were kind of riding that inflation trade throughout most of this year. And we've actually seen them suffer a lot in the last couple of weeks, and they've been pressured to buy stocks and bonds. So obviously the big questions from the minute is whether that big inflation trade has room to grow, which we have seen a couple of times this year where we were like, oh, we're done, there is this peak, we're going back to maybe more risk-on strategies, but that has reversed a couple of times. So everyone is looking whether there is a pause, whether there is a pivot, and a little bit more direction. And we can see this week there is a little bit of a hold in markets, and everyone is just waiting for any economic data prints or direction from the Fed.
Yeah, or just waiting for this week to be over, perhaps, Denise. I mean, what are your thoughts on, I mean, volumes this week? Do they look pretty low? Do we all look pretty distracted? We have Thanksgiving, of course, in the US. Yeah. A number of European teams playing their first games at the World Cup today. Exactly. That could be another thing that distracts people.
Yeah, I mean, historically, Thanksgiving week has been a quite slow one. Like, if you look at the last 2 weeks, this is actually one of the quietest periods of markets this year, which kind of seems impossible with all those moves we've seen going up and down. But like, if we look at 1% moves down and up, this has been the longest patch where we haven't seen that move. Obviously, we saw it yesterday, but for the last 2 weeks, it's been very quiet. But what we're looking at, usually in a quiet week, moves can be quite significant and elevated. So we're looking, for example, in the option markets with some short-dated options, what's going to be happening. So despite the short week, despite the low liquidity, there may be some moves that may happen throughout the rest of the week. So there is still to watch.
Okay, one eye on the football, one eye on the Bloomberg. Thanks very much, Denise Sakova, joining us there, cross-asset reporter with thoughts on a number of assets this morning. For more market analysis, check out the Markets Live blog. MLIV Go is the function to use on your Bloomberg terminal. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. In Virginia, at least 6 people were killed in a mass shooting at a Walmart on Tuesday night. The shooter is also dead and several others were wounded. It took place in Chesapeake, just outside the city of Norfolk, and comes just days after a gunman killed 5 and injured 17 at a Colorado LGBTQ nightclub. It's a major blow to Donald Trump. The Supreme Court has cleared the way for a House committee to get 6 years of the former president's tax returns. It's a resounding triumph for Democrats after a 3-year battle. Still, they have only a few weeks to review the returns before Republicans take control of the House. The Federal Reserve is set to show how united policymakers were over a higher peak for interest rates than they previously signaled. Minutes from this month's meeting are released today. After that meeting, Fed Chair Jerome Powell said that rates would probably rise higher than projections in September had indicated. And Bloomberg has learned that the European Union is discussing capping the price of Russian crude oil at between $65 and $70 a barrel. The Group of 7 is also involved in the talks. EU ambassadors are meeting today with the aim of approving the cap mechanism and a proposed price level. So obviously those headlines crossed just a few moments ago, Matt. Not too much movement in oil futures at the moment. WTI up about 0.4% right now.
Yeah, and I mean, we've seen a bit of a roller coaster in oil prices of late. There was, of course, the report that OPEC was going to boost production. That was then denied, and we saw oil fall on that and then rise after the denial came out. But in terms of this Russian decision from Europe, these seem to take a long time, and we're never sure whether, Anna, they stick to any of these decisions. So I'm not sure it should move the market that much.
and the ambassadors have to approve it first at EU level, then agree it with the rest of the G7. So we'll see where it goes. And crucially, what's Russia's reaction to this going to be? Because President Putin has said that he doesn't want to supply to countries that have caps. We'll see how that goes down. In terms of other news, we've also been following the bid for Scottish independence vote that the Scottish National Party has tried to get through the Supreme Court, although they failed in that. Nicola Sturgeon, the Scottish First Minister, is going to make a statement in around an hour's time. So if you're interested in the pursuit of that Indy Ref 2, you may want to follow that. Coming up, though, we'll talk about the holiday season and shopping. Stacey Widlitz joins us. This is Bloomberg. This is Bloomberg Surveillance Early Edition. Here's what you need to know. The disgraced founder of FTX speaks out. Sam Bankman-Fried apologizes to staff and says that collateral collapsed by $51 billion as the crypto exchange crumbled. A warning from Credit Suisse. The bank says its fourth quarter loss may hit $1.6 billion due to massive outflows of wealth management funds. And violent protests erupt at the Chinese factory that is the biggest maker of iPhones. Workers battled security personnel over tough COVID restrictions. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. Matt, I know for you and Kailey, this is your last day because, of course, of the Thanksgiving holidays. Some market closures to think about over the next couple of days. And US markets do seem to be in limbo as we head towards the start of trade in the US.
Well, although we've gotten up over 4,000 on the S&P 500, we closed there for the first time since early September. So a pretty good run it has been, and it looks like it's holding for now. We have S&P futures up only 0.1%, but there's still 4 hours to go until the start of trade. So we'll see if investors want to hold any of these shares over the long weekend. Of course, it's not really a long weekend. I guess officially Friday is still a work day, but nobody in his right mind works on that day. The U.S. 10-year yield is down, but just a smidge right now. So 375.57 is where we're holding. I'd said earlier, if you see the 10-year yield come down further, that's more of a tailwind for risk assets. So the fact that we're coming back to the unchanged level is maybe not good, not a good omen for the open if you're long. NYMEX crude is down about two-thirds of 1% at 80.40. But it's holding above the $80 level, and we're seeing Brent around $90. So, again, those denials of the report that OPEC was going to, for some reason, raise crude production. I have no idea why they would do that. Definitely holding the market pretty firm. Bitcoin also holding firm. Right now, it's up 2.5% from some arbitrary time, either last night or yesterday. I never know, but it doesn't really matter. The point is it trades 24 hours a day, 365 days a year, and it's been holding at unvolatile levels of 16,005 since the collapse of FTX, and before that it was holding at 20,000. So it doesn't really seem to move all that much compared to a lot of other risk assets. Kailey, what do you see in terms of pre-market movers?
Well, a lot of them are tied to crypto because as you've seen that kind of stabilization in the $16,000 range for Bitcoin, it is providing some support to those crypto-related equities like Coinbase, which rallied more than 5% yesterday and is continuing those gains in early hours this morning, up about 3%, and other crypto names like Blockchain, Marathon Digital are each higher in the ballpark of 3.5% to 4% as well. But it is a much larger move for Manchester United. This on news that the football club may be up for sale. The Glazer family that owns it is weighing strategic options, so that stock is up more than 10% before the bell, Anna.
Of course, listed in New York, which is why it falls into your movers and not mine, Kailey. This is a picture on the European equity markets then, a European market check for you. And European stocks actually up by 0.25%. We have seen some strength coming through in the energy names and also basic resources. That is working to the strength of London. We've got some energy prices moving higher. Matt talked about what's going on with oil prices. The natural gas price in Europe up by 7.6%. We've heard from the EU before today, and we were talking about the cap on oil prices, Russian oil this is. The EU yesterday was talking about the cap it wants to put on this benchmark gas price, and they agreed on a price of 275 euros a megawatt hour, which is way away from where we trade at the moment and is a level that is very, very high, and we only breached it for a very brief period, and there are lots of conditions attached. So a lot of people asking how valuable that cap or how useful that cap is going to be. Today, we see gas prices go higher because there is concern about just how cold it gets during the month of December in Europe. The pound is up at 119.11, up a touch this morning. We've heard from the Supreme Court in London. They've thrown out the Scottish Government's attempt. The SNP leading the Scottish Parliament, they've thrown out that attempt to bring another independence referendum next year. We will hear from Nicola Sturgeon, the First Minister of Scotland. She's going to be speaking in just under an hour's time, talking about what this means for Scottish democracy and where she sees things going next. Credit Suisse is down by 4.6% right now. We've heard from them about their profitability, the hits that they're taking on outflows right now. Also, a focus on retrenchment in China just weeks, months after they'd actually expanded there, Kailey. And of course, there is an EGM taking place, so we're going to be talking to a guest shortly about what they expect, a shareholder, in fact.
Yep, and very much looking forward to that conversation. But first, Anna, we got to talk about retail. Get your shopping list ready. Black Friday is just around the corner, and retailers could see mixed results this holiday season as consumers hunt for bargains. Macy's CEO Jeff Gennette spoke to Bloomberg last week about the upcoming holiday shopping season. Take a listen.
What we're seeing is a return back to the 2019 pre-pandemic buying pattern for the holiday. That's why we're really saying, what does that mean for Thanksgiving? What does that mean for Cyber Week? What does that mean for the last 10 days before Christmas? So we're adjusting our plans to accommodate anticipated higher peaks.
Joining us now is Stacey Widlitz, president of SW Retail Advisors, who is up early for us on this day before Thanksgiving. So, Stacey, thank you so much. I've already done some preliminary online browsing for gifts. It looks like I'm seeing a lot more discounts and bargains than I saw last year. In theory, that's a good thing for consumers, but what does it mean for the retailers which are trying to work down inventories?
Hi, Kailey. So, absolutely happy Black Friday week. The deals out there are incredible, and you're seeing many brands start earlier this year. So this past weekend, there were, Tommy, Vans, Urban Outfitters, Hollister. There were better deals this weekend than last year, the weekend before Thanksgiving. So the consumers out there, they've started early, but as we heard from a slew of retailers, the second half of October was weak. November, the beginning, many said was volatile to weak. So I think retailers are out there. They're pushing those promotions because they need to move inventory. We are still over inventoried in the space. It's better than last quarter, but still we need to clear the decks, move into a fresh 2023 and reset the gross margin base.
What's the differentiation like, Stacey? I mean, we should clarify we're talking about these big box businesses, right? But some of them have had great reports like Walmart. Others have had poor reports like Target. Why the difference?
So you have to separate the two. So Walmart is grocery, right? So there's inflation of high single digits. So they're benefiting from those AURs or average ticket increases. Of course, also Walmart is gaining the higher income customer. Their biggest share of their grocery same store sales came from $100,000 and above customer. That is new for them. There is absolutely a trade down going on. If you look at Target, it is discretionary. They have an emerging grocery business, which is solid and doing very well, but the majority is going to be discretionary, which people are pulling back on. Across the board, we've heard that at the end of October and into November, people are being more cautious, whether it's consumer electronics, apparel, you name it.
What's the retail labor story like right now, Stacey? Because we've heard some reports like Amazon, for example, reducing headcount. Okay, only a very little bit, and it's a gigantic employer. But other companies like UPS, I'm seeing seasonal labor already at work. So what's this holiday season going to be like for the worker?
Yeah, so I think what you're seeing is retailers are hiring fewer people this year. There are some layoffs out there, but I think in general, one of the biggest pain points over the past year has been lack of labor in stores. People don't want to work at retail because everybody's stressed. Customers aren't nice all the time. So you're seeing absolutely it's harder to get people back to work. And the other problem is that we've had to pay people much more to work in retail. And as we all know, once you raise labor prices, they're sticky. They don't come back down just because inflation calms down into next year. So the cost of doing business is higher on a permanent basis here.
Stacey, good morning to you. What are you seeing in credit card data? We talked yesterday in the program about corporate balance sheets being in decent shape post the pandemic. What do individuals' balance sheets look like? We know that on aggregate, some struggled, but some managed to, of course, build up those balance sheets during the pandemic, but now getting back to prior levels. So what's your story?
Well, now you're seeing you're seeing the credit card usage tick back up. And we saw the data that came out yesterday. And interesting, Best Buy commented on their call yesterday that they're seeing customers start to use more credit. So you don't like to hear that, right? Because that shows us that all this spending and the free money we had over the past couple of years helped people keep the economy and keep purchasing, chugging, but now it's going back onto the credit card and building up debt here. We're also hearing, the high-end customer in some cases is still trading up when it comes to even things at Best Buy. They commented on that. While the low-end consumer we know is trading down across the board, whether it's food, private label, or whether it's less expensive items. So we're definitely seeing a huge bifurcation between the wealthy and the middle to low income consumer.
How could the holidays change that, though, Stacey? If people are kind of penny pinching in their day-to-day life, do they save those splurges for the holiday season, for Christmas?
I think they do as much as they can. But Kailey, if you think about it, even Thanksgiving, coming up, turkey is 17% more expensive this year than last year. So everything you do just costs a lot more money. So there's less left over in your wallet for those splurges. So they might be smaller splurges, or they're going to be splurges, sadly, on your credit card that when they show up to hit you in January, maybe you're not feeling as generous out there in the market in January and February.
Stacey, thanks very much. Thanks for joining us. Stacey Widlitz, president of SW Retail Advisors, with her perspective on retail ahead of the holiday season. Now, coming up, we will get back to the banking story in Europe. Ethos Foundation CEO and Credit Suisse shareholder joins us. Vincent Kaufmann will be with us. We'll get his thoughts on Credit Suisse's restructuring efforts, their capital raising, and all the rest. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, an interview with Jeff Currie, Goldman Sachs Global Head of Commodities Research. That's at 6:30 a.m. in New York, 11:30 a.m. in London. This is Bloomberg.
There's a very, very real risk that clients continue to pull out their money because they're looking at Credit Suisse and saying it's starting to look a bit shaky. Bear in mind, in sort of the Swiss wealth management private banking business, you tend to have people who are basically looking at capital preservation more than anything else. So these are typically sort of fairly risk-averse investors, and they're looking at the landscape and saying, Credit Suisse not looking so stable, let's start to move some money out.
That was the CEO of Opima, Octavio Morenzi, discussing Credit Suisse earlier on Bloomberg Television. Joining us to talk more about this is Vincent Kaufmann, CEO of Ethos Foundation. Ethos Foundation is a proxy advisor to Credit Suisse and represents 3 to 5% of Credit Suisse's voting rights. Vincent, thanks so much for joining us. Let me first ask you about the outflows that this business, the wealth management business, has seen. That is clearly, for one of the big two Swiss banks, the most important thing. Are you worried that investors are losing faith?
Yeah, we've been worried for quite a while. I think this is a confirmation of what we heard in October, and that's also why I think the board has pushed this capital increase today. They need to restore trust, and we are worried, and so we would have preferred a more stronger plan, actually.
Well, so Vincent, what are you telling then your shareholders? I mean, at some point you want to stop throwing good money after bad, right? Is there an existential question here?
Yeah, definitely. That's why we need something stronger to restore confidence. Again, this policy now to move with a reduction of the investment bank is something we have been asking for a while. The restructuring in terms of bottom line by cutting job is not a strategy per se. So growth initiative, restoring reputation are key strategic priority, and it's not my impression that the board is taking that into account. Having a shareholder meeting today without the presence of shareholders, having a board member having conflict of interest in proposing this new strategic initiative, that's not the way I think the bank should restore trust.
Vincent, so we've seen the Credit Suisse has won approval for then this $4 billion capital increase as we've been discussing. And you have, along with some other shareholders, not wanted to see that happen. Why do you think the company has a different view of this? Why do you think they want to raise this money?
No, I think it's key that we need to raise money. We need to strengthen the shareholder equity. Where we are skeptical, and that's it. And the majority of shareholders approved was the dilution. So the part of the capital raised without preemptive right. So on the second, there was two different stages on the capital increase. So the first one as a private placement for selected group of investors, and the second one with preemptive right. So with preemptive right, we are protected against the financial dilution. We can sell out the preemptive right or take part to the capital increase. So it's more on the first part, which is a capital raise of 1.8 billion, which will actually provide now the Saudi bank with almost 10% of the voting rights, which is worrying for us.
Okay, and tell me more about why that worries you, Vincent. I imagine this is to do with ESG concerns or commitments around sustainability. What impact do you think this large holding by the Saudi National Bank is going to have?
So first of all, it's a dilution. Now we have a new, I would say, flatmate or co-shareholders we didn't really choose. So of course, I think Credit Suisse has a lot of work to do in terms of sustainability. They are late. They are still very exposed to lending in the fossil industry. That's why we also submitted last year a shareholder resolution to reinforce the climate strategy of the bank. They are on their way, but still a lot of exposure. And of course, with such new shareholder, maybe less, or maybe certainly less sensitive to climate risk and to reducing the exposure of the banks to fossil asset. So that will certainly dilute not only our financial board, but also our vision of the long-term vision we have for Credit Suisse.
Vincent, obviously after the series of scandals and crises we have seen, a lot of heads have rolled. There's new management in place. After a few months on the job, how confident are you in the leadership of Ulrich Kroner?
I think he has to do what he does best. We told him he was actually recruiting for this, cutting costs. His name is not holds the knife for nothing. So he's known for this. But we would also need some more ambition in terms of growth strategy, innovation, and maybe that's where we're still waiting a little bit more plan from the new management team. Also, so cutting costs is something, but growing the business is another one. So hopefully he can do both. It's still to be seen.
You say you're still waiting. How far does that patience extend, Vincent?
I mean, at one point, shareholder trust and client trust will define if this business can keep going on a standalone basis. And again, that's why preserving the key assets, the Swiss bank, which is a key bank for many of Swiss. A small Swiss business like small and mid-sized cap, they finance also a lot of the Swiss economy. So it's a bank. This bank is key for the long-term interest of many businesses and so on. So we have to preserve this company on the long term. They are a key business partner in developing many different business, and that's what we need to preserve. A partial IPO, and I think it's something now it's forgotten, but would have still been a solution to restore the trust in the business which is working.
Okay, Vincent, how would you characterize the wealth outflows that we've seen announced by the business this morning? Back to really where we started the conversation. Some are suggesting this is the worst exodus since the financial crisis. Credit Suisse trying to suggest that things have got a little bit better in the most recent weeks since October. How would you characterize the outflow story?
yeah, I think it was a loss of confidence, a lot of rumors. My view is that the bank is still well capitalized. They still have some buffer capital to be used in case their tier 1 ratio goes down. So, and I think it's one of the 2 largest Swiss banks. It's a systemic bank. It's a too big to fail bank. So I remain confident for the future. And I guess clients have also now seen the part which is part of the rumors and part which is tangible. So of course, reputation is key for a bank. So they need to restore trust. So, but I remain confident on the prospect of the bank. So this episode of outflow of October, I hope I hope will diminish, and that client will also look at the fundamental of the bank, which remain strong.
Vincent, thank you very much for joining us. Vincent Kaufmann, Ethos Foundation CEO and Credit Suisse shareholder, with his perspective on the extraordinary general meeting, the EGM, taking place at Credit Suisse today. Coming up later today, Andrew Sheets joins the team, Morgan Stanley Chief Cross-Asset Strategist. That conversation at 8 a.m. in New York, 1 p.m. in London. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Anna Edwards in London. Now a quick look at what is coming up for the rest of today. All of these times are in Eastern time, so plus 5 hours if you're in London. At 7 a.m., UK Prime Minister Rishi Sunak will face questions from opposition leader Keir Starmer. Then at 8:30 this morning, we'll get U.S. initial jobless claims, and they are expected to inch up as conditions in the labor market show some signs of softening. Plus, we'll get more economic data in the form of new home sales at 10 a.m. Eastern. Plus, the Fed minutes will come at 2 p.m. And those are going to be really interesting, Matt, because the November Fed meeting was so interesting in that the statement wasn't that hawkish. What was hawkish was Jerome Powell at the press conference. Daniel DiMartino Booth of Quill Intelligence came on the show the next day and called him a one-man dot plot. So it'll be interesting to see if the minutes reveal whether or not the rest of the FOMC is really behind him on the words that he said.
Yeah, and then the speakers that we got after, I want to point out that I've never seen this many speakers offering their own views in my life covering the Fed. But it just seems like they're nonstop, and we heard about step down after step down after step down. Then the market turned bullish. Then all of a sudden it was back to don't get your hopes up. There's no pause or pivot coming. So it just seems very difficult for these markets, Anna.
Yeah, the ebb and the flow of the Fed conversation over recent days has been quite difficult to really grasp and to get your hands around. Also looking ahead then, Kailey, in terms of what is coming up, in around half an hour's time, we'll hear from the First Minister of Scotland. She'll be giving her response to the Supreme Court's ruling that has said that there can't be another independence referendum next year. We'll see what she has to say about that. Also on the oil front, we've seen oil prices actually dropping in response to that story we covered earlier. The EU considering imposing a price cap on Russian oil at $65 to $75 a barrel. Ambassadors need to approve it, but then the G7 could announce something later on today on that front. We will watch. This is Bloomberg.